Okay, so normally when I put out these news updates, I pick a lead story to go with, but there's just so much that has happened over the last couple of days that I couldn't think of one to lead with. So I'm just going to go through these in no particular order here, summarize some of the top stories that we've seen over the last few days. My main point here is just to bring you up to date. I will be putting more complete coverage on these stories in this weekend's edition of the Pulse newsletter that we put out every weekend. If you haven't subscribed, I'll put a link here so you can do that as well. So I want to start today with Canada's inflation rate. The numbers came out this week. Inflation was down slightly, about 1.9% in November. That's down from 2% in October, and it came in below market expectations. But this does line up with the Bank of Canada's outlook for inflation sticking close to that 2% target going forward. Now, that said, the CPI trim inflation rating, the Bank of Canada watches this very closely. That strips out volatile items. It stayed steady at 2.7%. Economists were expecting that to dip to 2.5%. So this could make the central bank think a little bit more before they continue on this relatively aggressive rate cutting cycle that they're on right now. Now, some details: gas prices, they fell less this month. They were down 0.5%. They were down 4% in October. Transportation costs were up 1.1% versus 0.3% the month before. Now, shelter inflation, that did ease to 4.6%, thanks mostly to slowing mortgage costs, although rent prices were still on the rise. Even food inflation dropped slightly. It was still up, but it dropped to 2.8% versus 3% the month before, as we saw grocery prices cool off there. So we do see this headline inflation moving in the right direction, but that more sticky core inflation, that could make it harder for the Bank of Canada if they want to loosen the monetary policy much more. Now, I want to move down south of the border, the Fed rate cuts and projections. So the Federal Reserve Board, they did cut interest rates by 25 basis points. That takes their target range to 4.25 to 4.5% right now. That's their third cut this year, but there is a bit of a catch here. Their 2025 outlook, that now predicts just 2 additional cuts totaling 50 basis points, and that's way down from the 1 percentage point that they had forecast not that long ago. The Fed raised its economic projections. If we look at GDP growth, that's now expected to be 2.5% in 2024, up from 2%, and then 2.1% in 2025. Inflation projections also ticked a bit higher. The PCE inflation rate is now estimated at 2.4% and then 2.5% in 2025. That goes alongside higher core PCE inflation numbers as well. Now, unemployment forecasts, these did improve a little bit. We see the 2024 rate is now expected to be 4.2%, down from 4.4%. So my main takeaway from this release is the Fed is really showing here a more cautious tone. That's very clear to me. They are keeping inflation expectations in check, but they're also staying optimistic about growth. Shifting to the Canadian dollar, that has now dropped to a 5-year low. It just dropped to about 1.44 USD, so that's about 69.5 cents for a Canadian dollar. And this is after touching its weakest level since March of 2020. So what is behind this slump? Well, there's more than one thing, but one of the main things, and we saw this in light of the Fed report, is their hawkish tone there. That strengthened the US dollar. And then, of course, our loonie, which is sensitive to risk, took a hit there. It isn't just the Fed, though. When we look at our domestic uncertainty, we look at concerns over the trade tariffs, and then, of course, we look at the Bank of Canada's rate cuts that they've had so far. They've all weighed on our currency here. Investors now, they're scrambling to hedge their bets. We see volatility in the 3-month loonie options jumping to around 6.6%. That's the highest we've seen in about a year and a half. And then you take on top of that, we look at the Canadian bond yields. They followed U.S. Treasuries higher. The 10-year yield is climbing to around that 3.4% rate. So when I look at the loonie under pressure here, it's coming from all sides, both global and domestic. So the biggest question here is, how will this affect the Bank of Canada? And I'm thinking it will probably force the bank to rethink its recent rate cutting spree that they've been on, or maybe the loonie is just caught sort of in this bigger macro storm. We're going to have to wait to see there. Now, the U.S. GDP growth numbers for Q3 2024 also came out. The U.S. economy showed growth at 3.1% in Q3, and that beat earlier estimates of 2.8%. It also was up from Q2's 3%, and that makes it now the strongest growth rate this year, with consumers leading the charge here. We saw personal spending jump by 3.7%. That's the fastest since early in 2023. That was led by a 5.6% increase in goods purchases, and then steady 2.8% growth in services. We also saw investment activity picking up. Spending on equipment was up a strong 10.8%, although residential and structural investments, they did stay in the red. They dropped 4.3% and 5% respectively. We did see government spending rise more than expected in this case. They were up 5.1%, while trade showed mixed results. Exports grew by 9.6%, but imports were up even more, 10.7%. So that left a net trade with a mild drag on growth there. Meanwhile, we're seeing private inventories. They were off about 0.22 percentage points. That was more than the estimate of 0.11%. So my main takeaway from this recent report here is that we are seeing weaker residential investment, and we're also seeing inventory issues that could raise some questions about sustainability. Some of the largest and most widely held stocks on the market are Amazon, Microsoft, Eli Lilly, Nvidia, and with Harvest High Income Shares, you can gain access to these core U.S. companies through single stock ETFs, which offer the added benefit of high monthly income. And if you want even greater monthly income, you might want to consider the Enhanced series. This utilizes a modest leverage of approximately 25%. So some of the highlights here are these are all stocks that you know. As I mentioned, Amazon, Microsoft, Nvidia, Eli Lilly. So you're investing in the leading businesses that have strong growth potential. Also, you can enjoy tax-efficient cash distributions that are supported by their covered call program. Some other benefits, they are Canadian trust units. They're available in both CAD or USD. And you can visit harvestetfs.com to learn how the Harvest High Income Shares can help you achieve your financial goals. I'll be sure to put a link in the description of this video. Now, also big news this week, and I have to include this in the report today, but I just want to start by saying this is not a political statement at all. I'm just here to report the data, and I know every time we talk about anything going on in Canada today, we get all kinds of people coming out of the woodwork with these crazy comments. Just keep it polite, keep it instructional, informative, etc. And if you're only here to whine and complain, then we're probably not the right channel for you here. The fall economic statement was supposed to come out earlier this week. And of course, we've probably all heard by now, Chrystia Freeland, the finance minister, she surprised everyone as she resigned just hours before the actual report was supposed to be released. She quit as a finance minister, and she cited disagreements with Prime Minister Trudeau over the government's economic priorities. And so her departure sort of all of a sudden just sort of threw the day into a bit of chaos, and it delayed the statement. It left everyone sort of scrambling to figure out, A, what to do, and B, what to say, probably more importantly. Now, when the report did finally come out, it showed a $61.9 billion deficit for 2023-2024, and that just blew past the $40 billion target that was set earlier this year. The report did include over $20 billion in new spending, and now much of that is aimed at economic growth and addressing the President-elect Donald Trump, his threats of these 25% tariffs on Canadian goods. Now, back to Freeland here. Her resignation, she criticized what she called costly political gimmicks, and she warned of the need to prepare for a potential trade war with the U.S. So while this fiscal update, it did highlight investments. It talked about the $1.3 billion for border security, $17.4 billion in tax incentives for business growth. It lacked clear details on any major spending plans. I didn't really want to include this next story, but it is pretty important and it kind of ticking me off, so I wanted to talk about it here. President-elect Donald Trump, he has been flat out taunting Canada. He's calling it a burden on the U.S., and he's joking, but maybe not so much. He's joking that Canada could become the U.S. 51st state. And he posted on Truth Social, and he questioned why the U.S. subsidizes Canada, and he seemed to throw almost whatever numbers or whatever figures were popping into his head at the moment. He suggested that Canada would benefit from lower taxes and military protection if it were part of the U.S. And this is incredibly undiplomatic and unpresidential to even suggest that, all of a sudden they're just going to essentially take over Canada. Now, this does come on the heels, of course, of the criticism that Trudeau is facing after the resignation of Chrystia Freeland, which we just talked about in the previous segment there. Trump did call Freeland a toxic. He's never been a big fan of hers. He's piling up on the pressure as Trudeau is trying to work to keep his leadership afloat. A lot of pressure there. So when you listen to what Trump's saying, I mean, the numbers don't always line up. One of the things that jumps out to me, he's claimed that Canada costs the U.S. anywhere from $100 million to to $100 billion. Now, that's obviously a pretty wide range there. But the reality is, and why this works, is this rhetoric, it does resonate with his supporters, so I don't expect anything to change mainly there. For Trudeau, this just adds another layer, obviously, in what is already a very heated political crisis that we find ourselves in here in Canada. So my takeaway from this basically is Trump's comments, they may sound exaggerated, but the timing couldn't be worse for Trudeau. We're just going to have to see how this all plays out. Thanks for tuning in for this somewhat abbreviated summary of what's been happening over the past few days. As always, I do appreciate you watching the video. We'll see you next time.